Well, welcome to my YouTube channel and, of course, blog posts about one company, one story. This is basically as I say, companies are stories. They're not just stocks. And I'm impressed with the people who participate and sincerely try to make something good and sustainable happen. But here comes the amateur legalese. I began investing in the companies in companies, not these ones in particular, but in their stocks in the late 70s. I am not a certified investment professional. My style and history of investing is described in Dream, Invest, Live, a book I wrote by request, which came out as the Great Recession, otherwise known as the Second Great Depression, began. Don't underestimate luck. It's over on Amazon and, of course, on the blog. And I'll show you links to those down in the description, and I'll flash them by the screen here in a minute. I'm also not an investment professional. This is not financial advice, but I like these. I like I like the fact that folks start companies and try to get things done. And so since I mentioned the book, here's the book. I've got 8 titles already. This is one of them. It was written, well, like I say, by request. A lot of the other ones I did because I thought they were fun. And I've been once a month, about a year and a half ago, I started just once a month doing a video about a company and its story, or at least my interpretation of its story. And I'm surprised I'm up to like 18 companies now. Let's see if I got that right. Come on, wake up. Let's see. Yeah, 18 videos. These are all small companies. Of course, everyone has their own definitions of what is small, but there you go. Since I've been doing this, though, I have a tendency, a pet peeve of mine are folks in the media who talk about what it was like in 2023 and they put that out in November. It's like you're not done with the year yet. You're barely done with the month. Come on. So this is January now, at least as I'm recording this, January 2024, and I figured it's a time to look back on 2023, especially because I didn't even realize I'd gotten up to 18 videos. So that's doing this for a year and a half. So I thought it was a good time to look back at the companies. I'm not going to go through every single one of them at all. We're going to talk about them in general. But it's an interesting time to kind of look back and see what's been going on with small companies, if nothing else. I think the largest one of these companies, I'm not going to show you the data on this because otherwise my screen would get really confused. But the companies are all generally under $2 billion market cap, which I think it's in the one case kind of funny that under 2 billion, well, 2 billion is a small number, evidently, in the world of American uh, corporate investments and things like that. Considering that there is Apple and Microsoft that are duking it out over who has more trillions, 2 billion is a small number. But those are the stocks that I prefer to invest in. Uh, the companies are interesting too, and one of the things that I like about investing in such small companies is that as an independent investor, there's a lot of competition, ironically, with the complicated companies. I don't want to even guess at how many analysts there are and researchers are analyzing, looking at, pulling data from all the different sources that give an estimate of what Microsoft is going to make in any particular quarter. That's their strength. They have those resources. I do not. But one of the resources that I have as an independent is that I'm not restricted by so many of the other restrictions that they have. I don't have a restriction on market cap or sales price or dollar volumes and things like that. If I think a company's doing something neat, I can go investigate it, if nothing else, because I think it's an interesting story. I do not invest in all these companies. As a matter of fact, I'll kind of go over that a little bit. But it is a fascinating sort of place because it's also easier to get to be part of the story, to understand the story, to understand what each company is trying to do. Frequently, at this size, they are trying to do one, maybe four things. But frequently, it's because they've got one technology. They may have more, but they're going to try to make one work because you can't get to the other ones until you get one to work. And it makes it easier as an investor to then try to understand the companies. and try to find out if any of it makes sense to you. If, and this is where I enjoyed it when it worked. It hasn't worked in a while, but I enjoyed it when it worked. Uh, Play to your strengths and don't try to, fight somebody, go compete when you're weak and they're strong. Uh, these small companies get overlooked. So their supply hasn't changed as a result, but the demand has changed, and demand goes down, price goes down. And frequently, the demand is down because people are people. Researchers and analysts have to convince their bosses, who are people, that they should do something with this company, whatever company that may be. And if they're trying to figure out where to put $2 billion, they're not going to put it all into one company. If the company is only worth $1.5 billion, they're going to be looking at Microsoft and Apple and things like that. So the really big companies get all the attention. And frequently people forget that at one time Microsoft was small, Apple was small. While I haven't had the success I had in my earlier years, that's the logic I had behind buying Pixar and America Online and companies like that and stocks like that. Uh, the downside that I've had has been two of the companies that I was invested in who are just had become massive and are part of my very nice portfolio. Were both taken out by basically by folks who are found guilty of doing things they shouldn't do, and guilty in a court of law. So that's the downside. It's easier to take down one of these companies than it is to take down a Microsoft or something like that. But having said all that, a year and a half in, and for the last year, these companies have not been having a good year, unfortunately. Let me see if I can bring up this. It's always an interesting challenge to, oh, there we go, to navigate technologies as they change. But here's the 18 companies plus an average of what they've done for the last year. Now, I didn't do it at the end of December 31st, 2023, because if you check around through my blogs and my videos, you'll notice that there's a bunch of other things I produced on that day. So after taking a break, I was actually able to catch up and do this one as well. But of those 18 companies, only 3 of them made money. Well, I take it back. That's the wrong way to say that. Only 3 of them had a stock that went up. Now, those 3 all went up, each went up more than normal. It wasn't the average of 7% that the markets historically have over years. And the S&P and the Nasdaq and the Dow have been doing reasonably well, as I recall. But this is also an indication of one of the cautions. There are many cautions with small stocks. Some of these have gone down. Well, let's see. There's one of them, 2 of them, 3 of them, 4 of them, 5 of them that have gone down more than 70%. These are volatile little companies, and a stumble on their part can just really crater the company. And they can also bounce back. I know that America Online eventually went, for me, it went from about $1 to 40. And at one point, it had lost 66% of its value. And I remember it being on the news that, oh my God, this thing is not going to survive because they're not making any money and the stock is down. And then America Online, of course, became a Goliath and then stepped away. And here comes Facebook and everything else. But these companies have had that kind of a response because they're all in, not all, but most of them are in their startup phase. This is the time in a company when story tells as much as performance. I'll use Microvision as an example. That's actually the first one, and sorry, but it flipped the chart backwards. But Microvision was almost flat for the year, considering Microvision that is only being off by a few percent is flat for the year. But they're a story company. Their key technology is one main technology, which is an oscillating mirror on a chip. And with that, they can turn it into a sensor, and they can turn it into a projector, and they can turn it into a lot of other things. Until they get that first customer, their performance is going to be bouncy, to say the least. And it's going to be bouncing not based on projections that have as much data behind them as Microsoft would have, but they're going to be based on projections of untapped markets. Some of the biotechs here are talking about unmet needs. Some of these innovations are like the solar window, WNDW, that has a way of turning windows into solar panels, which seems just kind of like a cute sort of thing until you realize that most buildings have more windows than walls, and the amount of roof space is small if they're in a high rise. And then there's greenhouses, which would become nothing more than just a power plant that happens to have plants inside it. These things have got some really neat ideas, but until they get that first set of sales, they're not going to do much. Of course, when they get their first set of sales, then everyone kind of goes, well, not everyone, but you sort of figure at that point things get a lot of attention. And whether or not there was a premium for optimism, there's also the discount for pessimism. And it's easy for a startup to have a discount for pessimism. The one will just point out, as a matter of fact, it is just news broke today. Solo, which is down 71%, had a three-wheeled electric vehicle, which, as far as I was concerned, was a great idea, at least in notion, because the majority of folks do not use a second seat in the car. Folks got to get to work or run errands, and that's it. An electric for 100 miles is not what you're going to use to go from Seattle to Spokane, but it is the sort of thing you're going to use to go from one suburb to the other end of the suburb, and one big box store to another big box store to back to suburbia again. Unfortunately, they've had some troubles with their first car. They had a management change. They had trouble with a merger after that. And today they just got bought out by yet another company, so they're going to have yet another merger. Not surprising that that stock is down 71%. But that's year to year, and these things burble. These things go up and they go down on a short notice. Now let's see if I can get that out of the way without causing too much hassle. There we go. So there's Solo. And thank you, Google Finance. You know, they were at $1. They're at 29 cents. Let's see where they were. If you look at the entire thing, they're up to $15 at one point. That's when the optimism is, and that's where the premium is on the optimism. The more dramatic example that I'm very familiar with is Microvision. And come on, Microvision. Believe it or not, this is on fiber, but things take time sometimes. Also, the fact that I overwhelm small machines. But if I go out and look at the max, so this is a stock that I've held since 1999. I'm a long-term investor. But there's that peak back there. It was at $500. That was optimism. And then there was the internet crash. And I bought back in after it dropped 20%. But it kept dropping and it kept dropping. And now it's at $2.45. And recently it's been as low as 15 cents. That's why these companies are not for the majority of investors, as far as I'm concerned. This is for folks that have a high risk tolerance. I have a high risk tolerance. One time I had the excess resources, the motto of can you invest? If you lose the money, can you invest? Are you investing money you can lose? And I lost it. But that's again because the ne'er-do-wells cratered two of my companies, unfortunately. And that sort of thing happens. But again, this is the kind of action that these small companies can go under. There's $20. That was February 19th, 2021. We're coming up on 3 years ago that was the case. And then it spiked back up again. That was some optimism when they thought they were going to get bought out. And they also thought that they were going to be in a highly successful product because Microsoft was involved, which is HoloLens. And they're still there, but how many folks are remembering HoloLens? It may still break through, but it hasn't broken through yet. And it can. And that's why I do invest in these companies, because I'll bring up the nastygram again. That is a hard sort of performance to have to survive. And that is why I do not I don't advise anybody to invest, but it's something to be aware of. That's why these sorts of things happen. But then again, you end up with, well, stock that goes up 134% in a year. The irony is, of all these companies, these ones here on the far right are ones I currently own, which at least some of them aren't doing too bad. Well, they're not doing as bad as they could, as bad as the other ones are. But these two in particular are American Superconductor and I believe Red Robin, which are two companies that I had before, and I sold them off because, well, at that time I had reasons to sell because what I do is every 6 months I take a look at all my stocks and I try and write up a little synopsis of them, and then say, does this change my story, my goal, their strategy, their situation, all these sorts of things as to whether or not I should be invested in it. And those two in particular, for reasons of not so much what was bad with them, but what was better with others, in my opinion, I sold those stocks. The one that's not on this chart is a company that's now large enough that it's no longer on this chart, which is F5. And F5, I bought at 3 and sold at 40, and was glad because I was able to buy a house on that, or at least put down a very nice down payment on a house. And lo and behold, well, stock went to 240. If I had just hung on to the stock, I could have bought this house for cash. That would have been sweet. But you never know, and that's one of the issues. That's why investing has risk, because you don't know. Well, this is a long rambling thing, but I wanted to kind of acknowledge the fact that uh, while I've been doing this once a month, and this is also an example, you do something once a month, and after about a year and a half, you've done about 18 of them. And that's a nice sort of cataloging. You can kind of start drawing conclusions and also just get a feel for what's happening out there. There is, despite these kinds of results, and despite how much bad news there is out there in the world right now, some of these companies have ways of generating clean power in ways that haven't been done before. Some of these folks have inventions for new kinds of gadgets. What Microvision's gadget collection is impressive. From projectors that fit in your cell phone to sensors required for driving automatic cars, all those kinds of things. And some of these biotechs are opportunities to treat diseases that have no other treatment. And that's an exciting thing to be behind. Personal finance is personal, and as much as it can be stated in cloud that, take all the emotion out of it, I can understand that. And I can also find that there are many folks who don't care about finance because they don't care about what's going on with it. They just see it as a bunch of numbers and they don't care about a bunch of numbers. I don't advise anybody on any of this stuff, but I will tell you that it's been easier for me to follow these companies, particularly the ones that I have stock in, because I care about what they're doing. And one of the reasons I do these videos and one of the reasons I do these blogs is because it's an example of how a little bit of research can provide a lot more insight into what's possible out there. And if I aid somebody by providing some information that gives them an idea how they may want to go look at something, great. If I help them start a conversation in their own head, I'm happy that I've done that. But again, that's one reason why I'm focusing on the story of the company, because I think these stories are fascinating. I do not know. This is a correlation. Look at this chart. This is a correlation between, just because it's a good idea does not mean it makes money, or at least not in the short term, or at least not in the stock price. It is crazy world out there in so many different ways. And one things I do like about living in this economy is not investing in such stocks with such a strategy is one of the reasons that I was able to retire at 38 in 1998. Spent less than I made, invested the rest. Lived a frugal life, kind of a minimalist. And if you want to get a feel for, some folks think that means sitting around and doing nothing. Here's a book about hiking up in the Cascades. I got 3 of those for 12 months out of the year. Walking across Scotland, bicycling across the United States. Now I've written books about science fiction and what uh, what one group of Luddites do in response to an imminent AI. It opens up these kinds of possibilities, which is just life enabling. And I hope that, well, the reason I call this book Dream, Invest, Live is because I hope folks have dreams and I hope they get to live them. And one way to bridge that is by investing. With that, then, I thank you all for having participated in watching these videos over the year and a half, reading the blogs, and if you're interested in this stuff at all, if you've put it up with this much of this vlog so far, this much of this video so far, then I'm impressed with that too. And I hope it's because there's something in it that benefits you and benefits all of us. So with that, I'm going to sign off. And what I typically do is I put this on YouTube, I put it on my blog, and I'll give you a picture of the blog again. trimbathcreative.net. It used to be trimbathcreative.com, but somebody stole that. And with that, I wish you well. Welcome to 2024. Let's hope it's better than 2023.